Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and it is Tuesday, and we've had already a day where you didn't know what was going to happen. You can feel the nervousness in the markets today, in the S&P especially, but it didn't really do much. It ran up a little, it ran down a little, but it did something really significant for me. It gave us the third day's settlement below the 200-day moving average in the September futures daily bar of the S&P. I have a couple of charts I want to illustrate to you about that. I want to show you what should be the next step in really throwing us over the fence into the bear camp. But 3 settlements on the futures S&P is a lot. 3 settlements below, consecutive settlements below the 200-day mover. It's got a lot of weight when it comes to my style and the way I look at markets. Let me read a little something from Johnny. Johnny wrote in. Johnny, I wanted to read this back to you because I will cover this in the chart segment. Johnny, hello Oscar. For your info, in your roundup last week, your Friday roundup discussing the 200-day moving average, you mentioned 3-day settlement below. Based on what I've learned from you, I think you're trying to tell me 3 days consecutive settlements below the 200-day consecutive. That is correct, Johnny. I will cover that next in the chart segment. 3 consecutive days below the 200-day moving average is certainly something that the fund managers will look at to decide what they're going to do next. If we can get that to happen in the cash market, watch out below. But the futures market right off the bat tells you what traders' sentiment is like out there. The traders who are trading in the S&P futures, their sentiment has pushed us down below the 200-day moving average for 3-day settlement, which we haven't seen, 3 days consecutive settles, which we haven't seen in quite some time. So we'll look at that. Let me continue with Johnny's letter. So yes, Johnny, you are correct. 3 consecutive settlement days below the 200-day moving average on the daily bar in the S&P. We have seen it. That will certainly help me want to be more short than long. Okay, so Johnny goes on to say, a tremendous thank you for your coaching, teaching, and discipline. Well, thank you, and thank you for paying attention, and you are quite welcome. About 3 years ago, I took a one-on-one course to learn the S&P Emini trading. The information was good, but not enough practical guidance to execute the strategy. It took me 2 years to learn how to profitably use the system, but it did not teach me to. 1, put my stops in first. You know where he's got that info, right, guys? There's only one place you hear that, and it is good advice. 2, once stops are set, do not move your stops. That's another rule that we adhere to all the time, 100% of the time here at the Trading Academy. Number 3, keeping emotions out. And everybody knows how I feel about that, right? Emotions are out. This guy is good. Johnny, you are good. This is a great letter. Number 4, being disciplined at all times. Number 5, avoiding the chop session from 11 a.m. to 2 p.m. Eastern. You know what, John? You can push that out past 2:30, quarter to 3, somewhere in there. You're still within the chop session. So push that out, 11:30 to 2:30, quarter to 3. That's considered the chop part of the day. During that part of the day, you traders who are in my premium room, you know I don't touch the S&P. I sit on my hands during that part of the day. Maybe I'll play with the grains or the meats, but I stay away from the S&P during the slower part of the day. Okay, number 6, technical factors such as the mirror image, outside reversals, etc., etc. Well, this guy's a really good student. Johnny, you are a fantastic student. You have learned a lot of the lessons we've put out in these videos so far. The subtle difference between scaling and averaging. Well, here's a guy who watched my video over the weekend for sure, right? Because scaling is something that we can do when we're trying to establish a position that we'd want to have on. Averaging is disallowed. It is not a way to trade. It's just not allowed here at the Omni Trading Academy. Averaging will not help you win in this market, in these markets that whip around. If you average, a market could just continue in one direction and wipe you out. Forget about averaging. Okay, number 8, knowing when to say I am done for the day. And you traders again in my premium room, you've seen me hit tilt before, and when I hit my tilt level, I'm done for the day. I start losing, I'm done for the day. I finish after three losing trades. If I get 3 dingers in a row, that's it for me. I stop trading for the day. Nobody needs to throw good money after bad. Number 9, losses are part of the trading process. Absolutely, unequivocally, no two ways about it. Losses are an integral part of trading, and if you are not willing to lose, you shouldn't be willing to play this game. It is part of winning. You have to lose to get to the winning. It's just no other way that you can approach this. If there were somebody out there that could just consistently win, well, send them to me and I'll work with the guy. I'd love to meet him, because nobody can do it. You have to take losers, and that's the way it works. And Johnny, you really seem to understand that. Very good letter. Okay. And he goes on to say, in the past, I have felt dejected when I had a losing day. Now, if I follow the steps and discipline, I'm able to chalk it up to experience. And that is one of the things we are trying to teach you here at our academy. It's not all about all the winning trades or following Oscar's trades or even following every Omni trade. It's what you can learn from this academy, especially you guys in my premium room. We do lessons together every day, and I share the wealth of all the knowledge I've accumulated over my 25 years trading. And you traders who watch my YouTube videos, I gotta be the only guy in town that educates people so well that they don't need to pay me for the help, because they already get it for free when they watch my YouTube. And that I'm proud to do, and I'm okay with that. And I'll continue to do that every day, and I hope you traders are learning lots from me. That's what this is all about. That's why I created this show. And he goes on to further say, it's never too soon to take profit. Number 10, rule number 10. It's never too soon to take profit, and many more salient points that you have taught us. My hat's off to you, Oscar, for shaping us beginners into becoming prudent and skilled traders. Wow, Johnny, nice letter. Thank you very much. Johnny, you are absolutely right. That is our job here, and I am so glad to hear that I'm getting through. If I've taught one person this year to truly do this right, I've done my job. If I can teach 10,000, hey, I've made a mark, right? And that's what we're going for here. So, Johnny, round of applause to you. Fantastic letter. You seem like an excellent student. That is just fantastic. Hey, a shout out to my Omniacs from Ireland, Australia, and Israel. We've had a busy day today. Shout out to you guys. Thank you very much for getting in touch with us. Okay, I got some charts I'm going to throw up on the board right now, and I'll come right back to you. Okay, traders, the S&P September daily bar. Johnny, to answer your question, 3 consecutive settlements below the 200-day moving average. And here they are. Settlement on Thursday, settlement on Friday, settlement on Monday. We are below the 200-day moving average for 3 consecutive settlements. Ouch! Watch out on the downside. It's starting to get serious here. Now, literally, in order to get fully bullish again, we need 3 settlements above the 200-day moving average. So we're really starting to get ourselves into the bear camp on this S&P daily bar. It looks like it may want to run up and test some resistance in the 1470s. 1478.87 exactly to the tick is where my average is coming in right now. The 200-day mover on the S&P daily bar. And there it is written in blue. And here it is. If I pointed it out to you, we'd have to move up from this spot all the way up here just to hit that average right now. So that's the futures. Let's look at the cash chart. The S&P cash chart has not even come close to the 200-day average yet. And in fact, it doesn't even look like too much damage was actually done to the cash market in consideration to what the futures looks like, because you got the rounded top and then the dip. Here, you don't have as much of a dip, but what you do have is the market now slowly starting to work its way down in this channel. And I'll tell you what, it's not looking good here either. If we could settle 3 days below this average, that would be incredible. Watch out below if we can get the cash market to settle below that average. But at this point, the sentiment of the traders out there who trade futures does point to this market starting to work its way lower, as if we are now turning into a bear market. Stay tuned. Next up, we're looking at the Dow Jones cash daily bar chart. Again, same sort of formation with the rounded top and then the drop. but we have not come down to the 200-day moving average yet. 12,824 is where the 200-day moving average comes in on the daily cash Dow Jones bar chart. I would like to see us get down there and test that average right in this area somewhere. If we can test that, 3-day settlement below that would also obviously take the S&P cash settlement below the 200-day mover. We get 3 days below there, and that's the end for us for a while. And you know me, I like being bullish-minded, so I'd prefer to see this market stay above the 200 and pull the daily S&P bar back above its 200. But I trade what I see, not what I hope for. And what I see are 3 settlements already happened consecutively below the 200-day mover in September daily bar. And I have to start taking the side of the stance where I am selling rallies in the stock market until told otherwise. Now, traders, just to follow up on something that we mentioned in the video on the Friday roundup over the weekend, we had a mirror image formation here in coffee as well as a 200-day moving average. Mirror image bar 1, mirror image bar 2. That would be these 2 bars right here. On day 3, we dropped into the range of the mirror image and settled above. Day 4, rally out. Day 5, even higher. We expect at least 2 days rally in the direction of the mirror image. We've gotten already 2 days. If we can hover above this 200-day moving average for another 2 days, we'll have 3-day settlement above the 200-day moving average in the September coffee, as well as a mirror image working in the bullish direction. That could be quite a market. Keep your eyes peeled on the coffee. Mirror image worked perfectly, gave us 2 solid days up, settling higher above the mirror image. That's what we look for. From there, you could get lucky and see this thing begin to settle higher and higher and higher still. Now that we had the 3-piece mirror image settlement, settled above the mirror image day 1, day 2, it could just keep going from here. Again, keep your eyes peeled. I will be watching the coffee market every day. Okay, traders, so you've seen the charts. You got a little bit of a look into the analysis that I've been looking at lately. 3-day settlement below the 200, as I keep mentioning, is powerful. Let's see what the market wants to give us. For tomorrow, we got 3 red omnis set up: S&P, British pound, and euro currency. That is for trade date Tuesday, 8/14/07. Right now, video we're doing is 8/13/07. Monday evening, 11:20 p.m. Eastern Standard, or Eastern Daylight, I guess we'd have to say right now. Let's get right to the S&P Omni. Red Omni pointing down, but I think we're going to get a bit of a rally first. So here's how we're going to look, the strategy that we're going to use to take advantage of that. The ESU7 for the mini and the SPU7 for the large. Omni's resistance, the low to mid 1470s. We're currently in the 1450s. Wait for a fat rally, sell some out up there. Omni's profit objective for the day, let me not say for the day. Omni's profit objective for the next 2 days is in the 1430s. The market rallies into the 1470s. We're going to sell them. If it breaks down into the 1430s over the next 2 days, we're going to take them back. I will keep you informed on that. We will get out at some point, so we may be holding this S&P overnight if we get lucky and get short. For you silver members at the site, find a good place to pick for your stop. Keep it out of the danger zone. Volatility alert for tomorrow. You're going to need wide stops. For my gold members, go to the site, take a look at your email, find out exactly where my stops are going to be and my exact entry points, and get your orders in. Could be exciting for tomorrow. Again, one more time, sell it on a rally into the 1470s. Look for a crack over the next 2 days to test the 1430s, where we'll jump out of that trade. Good luck on that one, traders. I don't care what anyone thinks. Good luck. You know what that's about, right? Okay. British pound, the cable for you guys across the pond. The cable, the BPU7. Omni's resistance, the mid to high 20100s. We are currently trading at 20110. Get your orders in. We're not far away from where I'd like to be kicking out shorts here. Omni's profit objective is the mid to low 200s. So I'm looking for a nice 100-point drop in the British pound, and then I'll buy them back. Again, Sell them in the 201 teens, somewhere up above 20100. We're 20110 right now. Buy them back if we drop 100 points or be out by the close. That's the September British pound. We have another currency, the euro currency, with another red Omni. Euro currency, the ECU7. Omni's resistance, the low to mid 136.70s. Right now trading around 136.38. We pop up a few points. I want you to kick them out up in the 70s. Omni's profit objective is the mid to low 135.80s. Boom, crackdown. If we could sell them in the 670s, we'll take them back about 90 points lower in the 580s. That would be a great trade. Let's see if we can get it. Get your orders in. Don't forget, traders, as I tell you in every video, we are here to help you bridge the gap between the days of old when you had an expert on the floor to call and today's times when you don't even have someone at a clearing firm to call because they all, they have so many customers and it's so worldwide, they only have enough time to go, give me the order, thank you, click. It is tough out there, and I know you got to type your orders in yourself. You have to disseminate the information coming from every direction and try to make sense of it and then trade on it. And it's not easy, and it's extremely intimidating. And we here at the Omni Trading Academy are here to help you get your emotions out of trading, figure out the techniques that you need, technically and otherwise, how to trade these markets, how to figure out how to survive here. We do that here every day at www.livewithoscar.com. So come down to the Omni Trading Academy and choose one of our services that we have there that will help you achieve what you would like to achieve in this industry. And again, I know it's not easy, and I've been there. So come on down and we will help you. I'd like to say, please send me emails at oscar@futuresanalysts.com. And, of course, we man our phones all the time, and you can reach us at 718-351-2266. For you traders in my premium room, I love the feedback. I love the give and take between us. It's really, really been going well. For anyone who's new to my videos, we have a live premium trading room now with cameras fixed on me and a microphone. You guys get to follow every one of my thoughts. I also share out my desktop so you can see the analysis that I'm doing throughout the day to figure out where we're going next. And you can hear my voice and hear my signals the moment they come up, even quicker than I can type the Omni. I speak it into the microphone and everybody gets a chance to react. So it's pretty exciting, and that you can join that by going to my site and do one of two things. You can either just join the premium room service, or you can open up a VIP trading account with me, and if I become your broker and act as your personal coach, you get to go into that trading room with me free of charge every day, and we're there all the time. We're certainly there every day, and lots of times we're there at night. So come on down once again to the site and see what we can do for you. Traders, don't forget to do your homework. Always, always, always do your own homework. Take a look at the charts, read the news, take a look at the technical indicators, and make sure that you agree that you think S&P is going down if you're willing to take that trade. I've said this in many videos. There is no holy grail out there. I've told this to you many times. Don't let any entity convince you of otherwise. I don't have the Holy Grail. You don't have the Holy Grail. The Holy Grail does not exist, so stop looking for it. But what we do have is a trading academy that will help teach you the techniques that are necessary to just continue to trade every day and survive in the industry. That's about as close to the Holy Grail as you'll ever find, so stop looking for it. Stop reading these ads. I watch infomercials on television. I read these ads that grab your attention in these trade magazines. It doesn't exist. You know what, traders? If the Holy Grail was out there, they wouldn't be looking to sell it to you or me. So you know what? Just try to do your own homework and use guys like me and other people who say they have the Holy Grail as simple indicators to help you figure out what you would like to do each day. That's the best way you can use my Omnis. That's the best way to take advantage of my Omni Trading Academy. Use it as an arsenal of tools to help you decide what you'd like to do in these markets. Okay, I think that's enough of a rant about that. I just want to make sure that you guys are doing your homework. It is so important. Don't forget, always place your stops first. And keep this in mind. Say this every day. Say it before you place orders. Say it once you've placed orders and the markets are coming to get you, because that's when you really need to be saying this. And you know what that is, right? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.